Hi everyone, welcome back to this series of market research using the amazing tool AmiBroker just to validate trading ideas that you might hear about or that might pop across your desk every now and again. This week's is really cool. In fact, it comes to us from Chris at Short Takes, an absolutely excellent blog. I really recommend checking him out. He's got some great stuff. And this week he's written about the rate of change indicator on the S&P 500. In other words, when it drops below 8.25% and then heads back above the 5 level, the 8.25 level and then the 5 level, and it's also above its 50-week moving average, just as a sort of longer-term bull market indicator, then that tends to outperform the overall market, or it's a really strong buying signal. So you can see the arrows here. As you can see, in 2008, it drops below that 8.25 level, and it stays below that and the 50-week moving average up until around July 2009, when we get a few more signals, one most recently in late 2011, all the way through to recently, and even most recently, there's the trading signal today, or in the last couple of weeks as well. So I thought, let's just check this out and let's actually validate this. What would happen if we bought a whole bunch of stocks, like just a random basket of stocks from the S&P 500 and or the Russell 3000? We can check that out as well. And when this indicator gave us the buy signal, what would happen? Would we outperform the market or would we not outperform the market? So all I did was I just quickly coded this indicator just in AmiBroker here. We've got 20 positions. We're putting 5% of our overall portfolio in each. We've created the indicator based on the S&P 500, and it's using the rate of change below 8.25 and then above 5 for a buy and below 8.25 for a sell. And yeah, really the rest is history. So what I've done as well is I've just added a tiny little bit of code, and that actually gives us a Monte Carlo test. So this is going to give us 1,000 random different versions of this particular test, so we can really get into the guts of it and find out if it truly does work, what the range is and everything. It's just going to be so cool. So all I do now, once I've defined the universe, we've got the S&P 500 there, and I just did it over from January 2005, so 10 years, the last 10 years. Now, we could do more, but sometimes, sometimes it's just easier data-wise to do it in the last 10 years for this particular purposes. So before we jump into it, of course, what I've done is just a standard buy and hold test. So without this indicator, and this is on the S&P 500, and basically out of 1,000 different random portfolios of 20 stocks each, just a regular buy and hold over the last 10 years, we've got the most common return is about 8.9, about 7 to 9% basically. And so there's your most common return there. So that will be our benchmark in order to go against. Now, the scatter plot as well gives us a really good indication of the risk involved. In other words, what's the maximum drawdown? So just for a regular buy and hold portfolio, the maximum drawdown we're looking at about 60 to 70%, with our most common results being around 50%. So in other words, if you just bought and hold a whole bunch of stocks, you would have to stomach a 50 to 60% drawdown or loss in your overall portfolio at some point in time. Now, obviously, that would have been 2008, the bear market there. So that's a pretty obvious one. And as you can see, the returns on the top here, we've got between 5 and 15% on the S&P 500, just for a buy and hold. Now, let's look into the actual numbers for using the indicator. In other words, using this indicator that Chris has outlined on his site as well. So if we did this one, if we just did a quick back test, it would give us, the results for one test. So using our indicator, we've got, an average return of 14% per annum, buying a whole bunch of stocks when the indicator says yes. And the win percent is about 80% of the time, which is really good, actually. So that's quite good. And the drawdown here's our portfolio. Starting with a hypothetical $50,000, it ends up at about just over $200,000 at the end of 10 years. So that's not too bad. That's really not too bad. And our drawdown is much better already at around 20% instead of 50 to 60%. Okay, so far things are looking good. But let's do it properly and let's look at 1,000 different versions of this particular test so that we can really get the actual results. So this is the S&P 500, 1,000 different random portfolios, only buying when the indicator says yes. And remember, we had our regular buy and hold was about 7 to 9%. Using this indicator, it actually brings it up to 13 to 14% as the most common version. So we've increased it by, what is that, 5 to 6% there potentially, just by following, that's every year, just by following this particular indicator, which is, that's a good result as far as I'm concerned. Definitely, Chris has done an awesome job on his research there. And this basically proves it, hands down, this is the actual data that proves it. So we've got the compound annual return and the maximum system percent drawdown. So drawdown down the left-hand side, annual return over this up the top here. And so annual return, we've got between 10 and 18%. So that's significantly better. And the drawdown, the maximum seems to be about 30%, and we've got between about 15 and 30% drawdown, which again is way better than our 50 to 60% drawdown if we were just doing a normal buy and hold. So those are the actual numbers, and how cool is that just to be able to see this? Obviously using AmiBroker, we can plot it on the chart as well, which is a really, really cool thing. So there's our rate of change indicator, and you can see the buy and sell arrows, when it would be telling us to buy and sell. There's that big bull market from late 2011 all the way to very recently, and it's just given that signal again in the last couple of weeks. Fantastic stuff. Congratulations, Chris. Solid research. Really, really great guy as well. Guys, check him out, please. Short Takes is the blog. But apart from that, I hope you've enjoyed this. Please swing me a message at the site. It's asxmarketwatch.com, or find me on Twitter at asxdave as well. I've got a whole bunch of free stuff on trading systems and coding in AmiBroker, and even just normal market research as well. It is absolutely fantastic. Check it out. Until we meet again, have a great week, guys. Happy trending, and bye for now.